All right, let's see what's going on here. We are breaking out and running. All right, let's start from the... Actually, hold on. Yeah, let's start from the hourly time frame. Kind of go down and see what's going on higher time frames. All right. So, breaking out of this level here, we got this 763 level that we just broke out of. So, off to the upside. We are pretty bullish right now so far. Tapping into pivot point on the 15 minute into an imbalance also. Again, there's that 763, 764 level right there. And then there's the 5-minute chart. Let's see what happens here. Let me check. I'll wait for this 5-minute range to kind of form. And in the meantime, I want to check, make sure we got what news we got today. So news-wise, 12:45, 1 o'clock, 6 p.m. All right, there's no news to be looking out for. So, we're going to wait for this. Possibly, if we can get a pullback here, we're in some pretty bullish price action. Nice if we could get a little bit of a pullback. Man, let me grab something real quick. All right. So we're kind of stuck at this pivot point here. Still breaking, trying to break through it actually. We need to wait for a little bit of a pullback if we're gonna do anything. Can't chase it. You can't chase it. We broke out of all this kind of resistance level, so now you would think you'd want it to turn into support for it to hold it. But I would wait for a pullback for some structure to form and then go from there. Wow, it's just ripping without any kind of like... It's alright, we got patience. Please don't tell me today's gonna be one of those days where it just rips again. Bruh. Sorry. What was I gonna do? I was gonna do something. Where's my phone? Oh, where's my phone? Dang it. We gotta kind of wait for a... I gotta kind of wait for a pullback here. We're already tapping into... We should be getting a pullback. I mean, you would think, right? Eventually it starts to pull back at some point. How deep that pullback is gonna be, that's the question. Right now, I mean, it's been 6 minutes into market open and this thing has ripped already, what, 100 points? What, 10, 40, 50, 60, 70, 80, 90, 100, 10, 20, 30. Yeah, like 130 points. This thing has ripped 130 points in 6 minutes. 7 minutes. It's like... Good morning, good morning. Waiting for a pullback too. Yeah, gotta be patient. One will come. So, gotta be patient for it. Trading NASDAQ. The only thing is it's trying to hold this pivot as support, which is an indication that this could keep going up. If it can hold this as support. If it can't, it'll start breaking back down, but buyers are still kind of keeping it up. And we got no news today also, so that's another thing. Oh, I marked out. Why am I on the 5 minute? Hold on, let me mark out this. So we got that 5 minute range set already. I don't know why I'm sleeping. Let me mark out this 5 minute range. So here's the top of that 5 minute. And then, so pretty big 5 minute range. All right, let's go to the 1 minute and see what's going on there. So trying to break out of this 5 minute range here, trying to hold it as support also. You see it bouncing up. Gonna be kind of, if this thing starts breaking back inside the 5 minute range, it'll be the first sign that this thing may want to reverse here. Again, I don't take trades off of, one of my rules is not to take shorts above view up. So at this point in time, I'm only looking for longs. Going with momentum, my opinion, right? There's no reason to be looking for shorts when you see buying pressure this strong. I mean, you're just trying to fade something that's you're trying to go against the flow. You're trying to swim against the creek. And why do that when you can go with it? There will be opportunities coming. You just need to be patient. Yeah, it didn't even get to enter. I would have loved to enter here for it to retest those levels, but I don't know. Maybe I'll still be interested in that. If we can come back down and let me mark it out, I guess. Kind of this would be like a point of interest for me, possibly. You know? That kind of like 74 level would be a possible point of interest. Broke out of that range, maybe comes back and retests it. We also got, other thing is we got view op down there. We got view op at 25,766. So we got view op right on top of that range. That structure that formed, I mean. Would be nice. That would be nice for a possible pullback, just like a retest into this level and then a rip back up. Got view up, got the bottom of the 5 minute range, got the 200 right there. So we got a lot of support down here. That's why I'm kind of like, right now it's trying to still hold this 5 minute range high. As you see, it's just, it's wicking into it and then popping right back up above that high. So bulls are still in control. Once it starts closing back inside the range, I think it's going to be a kind of like the first red flag that this thing may want to go a little bit lower. I overslept. I'm glad I haven't missed any. Yeah, you didn't miss anything. It really didn't give you an opportunity at all to really enter. Unless your marketing order into the trade really gave you no opportunity to get in. But yeah. And if this thing just keeps ripping, I mean, shoot. I hope that's not the case. But yeah, give me a second. Oh man. All right. Whew, man. Where's London highs? We got pre-market at, well, we got pre-market highs at, let me see. I don't really pay attention necessarily to London highs, but pre-market highs are at 25,956. 25,956. So if we go to hourly chart, man, this thing is just 956 would be right below that kind of like level high right there. So that's pre-market highs up here. So it's what it kind of looks like it wants to go for. You see it's also on the hourly chart. It's inverting that that gap right there. We got what? This is this is an hourly candle. So this hourly candle what? Opens 10 o'clock. So we got like 15 minutes left. This thing inverts that gap. I mean, that's a pretty big red flag also that we're gonna continue going up, meaning that bulls are strong enough to kind of hold it up. But uh-oh. Is this a sell-off? It would be nice if they can actually give us an opportunity to get in. If the train comes back to the station. And then you're thinking, all right, so you're kind of hoping it holds, right? So what I'm thinking is, this is kind of the risk you're taking. And obviously, like, if this thing pulls back, I'll take the trade. But, like, the risk I would be taking, obviously, and there's always risk in trading. You don't know. But, like, you would want this thing to pull back and maybe hold these highs up here that I have marked out. Right? The other risk you're kind of taking is for it not to hold those highs, come in and take out the low. Because you see it really did not take out a low. It took out this internal low right there and then ripped back up. But we had a low right there that never got taken out. Like a big external low. So that's something that, like, you got to pay attention that if we possibly could, you know, not hold that level and come and take out a low first before moving back up, that's always a risk. That's why some people wait for a sweep before they enter. I don't necessarily. I'm a break and retest trader, so I wait for the retest. We'll probably get some kind of reaction off that level. All right, so this is the first time it's breaking back into the range, which is, like I said, if it does this, it's the first red flag that we're probably going to go lower. Well, my nose is like, man. I had bought a car and I guess they didn't use the freaking heater. They didn't replace the filter or something, and I turned the heater on that car and like this weird like smell came from it. I guess they didn't use it or in a long time, and now my freaking nose is like, I'm like sneezing. Hoping to get some kind of freaking... Oh my gosh, wait. Oh, that's just the pivot. Trading NQ, yes. 1 micro, in each up 400, much easier. Yeah, exactly. See, that's what I'm talking about. What you don't need to trade one mini. You don't need to trade this big size. You really don't. If you trade one micro, that crap adds up. You know, you catch a 50 point, I mean, not a 50 point, even 50 point move, or like $50 here, $100 here, 150, 200 bucks, and you're just like, you're catching these little moves, and guess what? You're doing it pretty stress-free because you're doing it on very like lighter size, so you're allowing yourself drawdown, and you're just like, you know, you're doing it stress-free. You're building up your account. That's what it's all about. You don't want to be so heavily sized that you're sitting there freaking scared to take a trade because you don't want to take a loss. Taking a loss is part of is part of trading, and if you're scared to take a loss, you're too heavily sized in. All right, so this is first. See, this is the retest. This is kind of what I look for, but obviously I'm not going to look for a short because we're above VWAP. But like this, kind of like we broke through it, right? Came back up, retested that level to possibly continue going lower. Looks like it wants to go lower at this point. So once it starts breaking back down, we have some bullish gaps here. The tough thing is, you know, I'd probably put my entry, to be honest, at the beginning of the gap just in case it decides to, if I do decide. So it's like, it would be 20, 40, 60. 130 risk per. Let me grab my phone real quick. All right. So that would be pretty much. I'm trying to do the calculation on the risk part. Oh, man. Oh my gosh, bouncing off that pivot. Oh, come on. Don't tell me it's going to go higher. Why is it not giving me an opportunity? This has got to hold as resistance here, this level. If it doesn't hold as resistance, we're going for the highs again. What do you think about silver right now? I heard it's ripping. Heard it's ripping like crazy. So silver is a good, it's just on a run. What does heavily sized mean? Pretty much means when you're trading, like for example, when you're trading prop firm accounts, they give you about, depending on the prop firm, anywhere from like a $50,000 account, they give you $2,000 to $2,400 drawdown, right? So let's just take, for example, a $2,000 drawdown. Heavily sized would be somebody risking one mini contract. So there are micro contracts with the smaller contracts and the mini, which are the bigger size. So you see these little boxes right here that I have marked out? Every box is 10 points, right, on the NASDAQ here. So if I'm risking one mini, that means every 10 points I'm risking $200. So as you can see, when you're a trader who's risking $1,000 per trade on an account that has a $2,000 drawdown, that is incredibly heavily sized, where you're taking 2 losses and you're blowing up your account. That's not how you should do it. And that's what it means to be heavily sized. You're not allowing yourself for some drawdown. You're not allowing yourself to take some losses. And then when you take 1 or 2 losses, you blew your account. What you want to do is like what somebody did earlier. He or she is trading micros. So with micros, you're giving yourself room for drawdown. You're not stressed out. So that person that's trading micros may be risking, let's say, they have a set risk size. Maybe they're risking $100 per trade. Maybe they're risking $200 per trade. And for every trader is different. You have to have the set risk that you want to take per trade. For example, for my situation, if I'm going in full size, and this is kind of where my discretion plays in. When I'm going in full size, it's a $200 risk. When I don't really like the trade as much, but I'm still willing to take the trade, I go in half size. I only risk $100. So it all depends on the trade and how confident I am in the setup and how good it looks. But even with my full size risk, if I take a $200 loss on a $2,000 drawdown, you could see how many losses I have to take in a row for me to blow my account. So it gives me that drawdown size. So that's why I tell people, don't be too heavily sized, because it increases your stress, right? And when you're too stressed out, you stop thinking logically. That's the problem. When you have a lot of stress going on and your freaking cortisol is spiking and this, and you're not thinking logically about the trade. But when you're sized down, where you're not scared to take a loss, automatically you're looking at the market with a fresh mindset, without freaking stress, without any of that. So you make trading fun instead of this like stressful thing that you're... Yeah, no problem. A lot of people make that mistake also because, look, I understand prop firms, right? People want to get a payout faster. And if you heavily size and you go on that run, you can get a payout pretty quickly. But those people end up just keep on blowing accounts. They're just, you know, passing an evaluation, getting put in a funded, blowing an account. Blowing an evaluation, blowing an evaluation, blowing an evaluation, pass an evaluation, getting put in a funded, blowing an account. Like, they're just cycling until finally they get that streak, right? Because you're going to go through a time where you're going to take win after win after win. And people go through that. Like just me recently. I took one loss so far in 2026, right? Last Friday, I took my first loss of 2026. So it's like, you're going to go through those runs, and they're trying to get to those runs so they can take a payout quickly. And listen, it does work. Like, it's a method that does work with prop firms. But the problem with that method is you're going to get banned. That's the problem. And then you have those traders where, right, Apex or Take Profit Trader bans them from buying more evals because prop firms do not want you to do that. That's the thing, is like, what do you expect, prop firms to do when you're trying to milk the system? The way a prop firm should work to be optimally profitable is, right, how these prop firms are set up. You have a prop firm that makes money, obviously, from people blowing accounts and people buying evaluations. That's how prop firms make money, right? And the goal of a prop firm should be to find the traders that can consistently make money without blowing accounts. So if you have a trader that buys an evaluation, maybe blows it here and there, like blows one, the next month blows another one, and then finally they see that trader starting to progress, and now all of a sudden this trader's not blowing prop firms. He's accurately sizing in, he's managing risk correctly, and he's starting to get to those payouts. He's starting to take payouts, or she, and the goal of that prop firm is to put that trader in a live account so that now they can make money off that trader trading live too. But the way most people trade prop firms, and even influencers, the way most influencers you see on TikTok trade prop firms don't like that because they're just oversized, over leveraged. They're just wanting to rinse accounts. They'll blow an account and wanting to go on that streak, and prop firms don't like it. That's why you see on Twitter a lot of times people are like, oh, this prop firm banned me from buying evals. Yeah, because you're rinsing accounts. They don't want to see that. They don't want a trader rinsing accounts and then waiting for that lucky streak so they can get a $20,000 payout. They want to see a trader consistently get payouts without blowing accounts. Gold, yeah. Gold and silver are actually moving pretty well. Props are scamming too. Absolutely, you're 100% correct. Props also, that's why you gotta go with props that have a reputation. Don't go with some no-name props that just because, it's a cheap account. Like, pay attention to very popular prop firms. What are popular prop firms? Apex is a popular prop firm. Tradeify, Take Profit Trader. These are some of the prop firms. Top Step is also a popular prop firm, but since they have their new platform now, they have a lot of issues, so I wouldn't recommend them right now with their issues. But always go with the most popular prop firms. That's what I do. I'm not going to go with some no-name company that's possibly going to scam me, right? I'm going to get to a payout, and then they're going to deny me the payout. You don't want that. So always go with the most popular ones. to protect yourself and diversify your, like, I have a Tradeify account, I have a Take Profit Trader accounts, I have Apex accounts, so I'm diversifying, right? And it puts me in a better spot. Where can I go to start trading? Any webs or so? What do you mean by webs? Have you heard of forced research? No, I haven't. What is forced research? Fears? Or you spelled it wrong. The scam is in the business model. Think it's all of them, but no, it's not all of them. You can't, like, the business model isn't a scam. It's not a secret that prop firms make money off of people failing, right? It's not a secret. The business model itself is not it's not a scam. They do pay people out. A scam? I probably should stop saying that word because TikTok's gonna flag me. But what a scam is, if they were to never pay people out, right? Yes, they make money off of people failing, right? But there are a lot of people who have gotten paid out by prop firms. There are a lot of people who had their lives absolutely changed from prop firms. I mean, think about a person that is learning how to trade and he's struggling or she's struggling, and for years it's learning and learning and grinding and grinding and grinding and grinding, and then finally that person gets a $30,000 payout. A $30,000 payout in today's economy is life-changing money for a lot of people, right? That's almost someone's yearly salary of a lot of people. So you got to think about it in terms of that. Like, it's not really, it's a difficult industry to be in. That's why prop firms are successful, because most people treat them as casinos. And if you treat it that way, you're not going to be successful. So, like, even for me, right? I promote prop firms. Why do I promote prop firms? Is because prop firms are one of the reasons why I am the trader I am today. Because if it wasn't for prop firms, I probably wouldn't be trading, to be honest with you. The amount of prop firm accounts that I blew to learn, if I would have done that with a live account, I would have had to quit a long time ago. Because that's another part of trading. To succeed, you have to be in the game long enough, right? People spend so much money in it, and you know, especially back in the day when you had to trade a live, your choices were you're trading a live account or you're trading a simulated account. And most people, like when I started, I didn't want to trade a simulated account, which is the best route to take, is to trade a simulated account. But most people don't want to do that, right? Just like me when I started. So when you end up blowing a bunch of live accounts and having to fund $2,000-$3,000 for every blow up, guess what? You're not going to last long enough to even learn the craft, right? It's like you going to medical school and then dropping out within the first semester. Like, obviously you didn't learn anything. So that's another part of trading, is prop firms allow you to stay in the game if you're smart with prop firms and aren't just being, you know, completely stupid. Like, even if I was spending $100 a month when I was learning, $100 a month doesn't, like, it's not the end of the world for me if I spend $100 a month learning how to trade. So they allow you to be in the game long enough to actually learn how to trade, and then when you do learn, you can get to a payout level, and you're telling me you could take a 20, 30, people have taken $100,000, $600, $1 million payouts, like, do you copy trade all your accounts? I do, yes. So right now I have 7 funded accounts. I have 5 funded accounts with Apex and 2 funded accounts with Take Profit Trader. I have an evaluation account that I'm like $2,000 away from passing for Tradeify. So the Tradeify account, because it's an evaluation, I trade it separately. But my funded accounts, yeah, I copy trade all my funded accounts. Research was ranked #1 in COD and now manages 8 figures. Oh, are they what's it called? Hedge fund? Hold on. What the heck is going on here? Oh, okay. Thought my chart was lagging at first. So This is something, this is another break and retest, but like I said, the problem with these kind is we've already pushed up so much. Like, this actually, see, this break and retest actually worked, but I'm always worried about taking break and retest. Actually, I was talking, I should have took this at least on a Tradeify account. Maybe not funded, but when we push up this high, I just get super skeptical of a pullback happening, and I don't want to be caught in like just a stupid losing trade. I would rather wait for a better pullback and then take a long, you know? Like, although this did work, technically this trade did work, right? You had the break. This is what I look for. But here's the break, right? We break with displacement. Look at all the volume that came in. We broke out of it. Then you had this candle pull back, retested this high right here, and then it went higher to at least the body candle highs up there. And that's pretty much that. There's the break and retest. Are you on a 5? No, this is currently a 1 minute chart. But I do go through multiple time frames. Through Tradeivate or... No, I use, for my copy trader, I use Replicanto. You do have to pay for Replicanto for it's a lifetime fee though. It was like $200, but it was it's forever. So I just wanted to go with the most popular one, the most reputable one. And so I wouldn't have these stupid issues that some people have with other copy traders. And I've never had issues with Replicanto so far. But before he led a hedge fund, he was ranked #1 in C. Dang. Yeah, I'll take a look into that. I've never... Y'all heard, some crap is going on with Jerome Powell, apparently. I trade a live account, definitely have to learn a lot to succeed. Yeah, and this is the goal of prop firms, right? A goal of prop firms eventually is you take enough payouts to then... by the time you take multiple payouts, right? Hopefully by then you've already learned a lot. And so when you get to that stage, your goal is to take all these payouts and then eventually fund a live account and then trade a live account. That's the goal of prop firms. Not necessarily to stop trading prop firms. You could trade a live account and trade prop firms at the same time, right? You could just have your live account as your main account and then just have your prop firm accounts as copy traded. So it's like, if you can make extra money with prop firms, then why not? Especially with a copy trader. You're not doing any extra work. But yeah, trading, it takes a lot to learn. I mean, the average... Well, what does it take the average person to learn how to trade? Like 2-3 years? If you can learn how to trade in 2-3 years, you're good. Like, that's considered, like, pretty good. Some traders, it takes them 5 to 6 years to learn. So every person is different. So it's not like... People have this stupid mindset, and it is the stupid influencers that make those dumb videos where it's like, I can make you profitable in a month. Learn my strategy, buy my course, and I'll make you profitable in a month. Realistically, you're not going to become profitable in a month. You're not going to become profitable in a year. It's going to take years to become profitable because it takes discipline, risk management, building the right psychology, building the right model, implementing the right rules. It's tough. It's not easy. If this game was easy, then you wouldn't be able to make a lot of money because naturally the skills that make you a lot of money are the skills that are hard to do or very few people do it. And those skills pay a lot of money. That's why if you go into McDonald's, they're not going to pay you $300 an hour to work at McDonald's. Why? Because they can hire anybody off the street and teach them within a couple hours how to flip a burger, right? So why do lawyers get paid a lot? Because they have a skill that most people don't have. Same thing with trading. It's a very difficult skill. I mean, you got to think about hedge funds hire some of the smartest people in the world. I mean, mathematicians with PhDs to figure out, you know, patterns in the market, to figure out all this stuff. So it is a very difficult profession that can pay you a lot of money if you learn it. Which stock? I'm assuming you mean stock. Stock. This is a future. I'm trading futures. This is NASDAQ futures. I watch lives and videos to learn from. Yeah, exactly. That's a good way. Learn from other people. I mean, there's, you know, other people make videos. Maybe grab something that this person has in their trading and their strategy. Learn something from this person. That's how I learn too. I learned something from this person, and I learned something from this person, and I learned something from this person. It's like over time, right? You're just learning, and you're on the markets every single day. You're watching price action, you're learning, and then eventually you start to recognize patterns, and then you build a model around those patterns, and then you develop risk management and the psychology, and then that's how you start to become profitable. You go from losing money to being break even to making money. That's typically how it goes. But you gotta it's like, you gotta be obsessed with trading in order to learn it. If you're not obsessed with trading, guess what? You're not gonna learn it. I'm sorry to break the news to you, but if you're not obsessed with it, you're probably not gonna learn it. Because nobody's gonna force you to be in the market. Nobody's gonna force you to learn, right? When you go to college, you're forced to learn. When you go to medical school, you're kind of forced to do the homework, take the classes. Trading, you're not forced to do anything. You could not trade if you want to. No one's forcing you to do anything. So that's why it's difficult. That's why I say you have to kind of be obsessed to learn. Here, give me a second. I'll be back in a second. All right, man. We are not getting the pullback that I want to see, man. This is like still holding structure to the upside. MGC is moving great. Yeah, I only look at NASDAQ. That's another thing, right? I mainly look at NASDAQ because, and I recommend looking at, I don't care, I would, gold and stuff like that, I would recommend to stay away from you, especially if you're a beginner. I would recommend to stay away from gold and all that. That moves like pretty crazy. But like, I would recommend finding something and sticking to that, because you understand, like, for example, I've been watching NASDAQ for a lot of years. I've been watching NASDAQ pretty much every day, and you begin to realize patterns. You begin to realize what NASDAQ likes to do. Even time frames, even like 10 o'clock, you realize we have reversals at 10 a.m. We have sell-offs at 10:30. Like these kind of time frames, I don't know why it happens, but it happens enough to where I recognize the pattern. And so if I'm in a trade, I can recognize that and take precaution versus somebody who hasn't been trading NASDAQ doesn't know that. So, but when you trade the same thing, you begin to know how it moves. You begin to kind of know its characteristics, and you trade it better. And NASDAQ, ES, they move plenty. They move plenty. Like, look at even today's move in NASDAQ. That is a plenty. Like, there are opportunities to make money on NASDAQ every single day. Well, depending on your strategy, right? Maybe not every day but in terms of making money, right? Maybe your strategy doesn't give you a setup, but what's the difference between minis and micros? The difference between, so you see these boxes on my, I don't know if you can see them clearly, it's hard to see, but these like very faint boxes on my chart, those are 10 points. So every box for one mini contract, a 10-point move for one mini contract is $200. A 10-point move for one micro contract is $20. So the sizing is different. So a $200 for 10 points on one mini versus a $20 on one micro. That's why I trade micros, because I could size according to, if I want to risk, hypothetically, let's look at this break and retest trade right here, right? It pulled back and tested that area. Let's say I wanted my stop. I kind of have to have my stop to be below here. With one micro, I would have to risk 2, 4, 6, like $500-600 I would have to risk with using only one micro contract. But with 500 to 600 with one mini contract, right? And I can't change that. With one micro contract, I would be able to risk what I want, $200, because it would be right. 20, 40, 60. So let's call it a 60-point move. So 60 plus 60 is 120. So 2 micros would be 120 risk. So you're just kind of like, you're doing the math on that to allow yourself to risk that $200 that, or $100 that you want to risk per trade. So it gives you that wiggle room to be able to risk that, versus if you only want to risk $200 and you're trading one mini, you have no wiggle room. You have to have your stop. You're going to get stopped out just for 10 points. So you're not allowing price to breathe. And sometimes it works, like this situation where it just like rips immediately. But sometimes price like down here, like it chops like that. And if you're risking only 10 points, you can get chopped up very easily risking only 10 points. That's why you got to allow price to breathe. You can't just like have it super tight to the point where you're either getting stopped out. Your price action is just like, it's too volatile to do that. Some people do it successfully depending on the strategy. If you're taking maybe trades at very crucial levels. But personally, not something I do. Did you play sports growing up? Yeah, I did. I was on the basketball team. I was the point guard. I still play basketball every week. But now before I used to play basketball, like, because I was on a team and everything, and I was kind of like, I loved it. I played it every single day. Now I'm more play basketball to obviously get better, but it's like a cardio. I really love the cardio with basketball. Yeah, but I'm like big on sport. I love sports. I'm the type of person, I would rather go and do like play basketball than sit at home. I would rather like longboarding. I skate, I longboard, I freaking play basketball. I do it all. Racquetball, yeah, I played racquetball with some friends before. It was a long time. I don't understand the rules to it though. It was just kind of like, it was just kind of hitting it off the wall and doing that. But there are like rules where they have the lines on the floor where you have to follow. I never like studied the rules good enough to like. But yeah, racquetball's a good any sport that makes you run a lot. Like the other day, I checked my step counter. When was it? Saturday. Saturday was like a day where I was doing a lot. I took 21,000 steps on Saturday. I walked 10 miles. And that's like, you get your steps, because especially when you're playing basketball, you're running around all. So, I'm big on, you have to stay active. You have to, especially the older you get, you have to stay active. Because when you stop getting active, you get to a point where like, if all you're doing is going to work and coming home and just sitting on the couch, you're going to get to a point where you're going to be doing something and one little slip up and you're going to break a bone, or you're going to do something or sprain an ankle. Like, your body's going to be so fragile. Like, I'm the type of person where if I have absolutely nothing to do, where it's like I'm bored out of my mind, I'm going to go for like a walk. I'm going to go to the skate park. I'm going to do something. I'll find something to do. Worst case scenario, I'll go for a walk. Like, that's like absolute worst case scenario. Guys, market makers are calling me. I'm gonna call him back later. It's a lot of steps. Yeah, that's 10,000. I was about to say 10,000 miles. That's 10 miles in a day. That's not normal. My average step count is about 10,000 steps. So I walk about like 5-6 miles a day. Which if you do a weekly basis, like a weekly thing, that's a lot. That's like you're almost walking 40 miles a week. And plus for work, I walk, I'm doing a lot for work, like working on cars and stuff. I'm like walking around, going to the store, going this, that. Just always walking around also. And the other thing is when you exercise, when you work out, you build the stamina so you don't get tired. It also helps you with your work. Because I can be walking around, running around all day and I don't get tired because I've built up my cardio to be able to, you know, go for a long time, especially playing basketball and playing sports. Like, I remember I had a very long break where I stopped playing basketball. And then when I first started again, bro, I couldn't play 30 minutes without getting cramps and all. I was like super tired. I was like, man, this is wild. I can't do this. And I kept playing. And now I could play an hour. I could play 2 hours without getting tired. Plus another thing that helps is I do pretty much every single day sauna. Sauna every single day helps a lot with your cardio too, because you're sitting there and your heart's freaking racing and you're building up that. Depression will do that to your body. Yeah, I think you gotta be active. You gotta, our bodies are, you gotta take care of your body. The thing about it is when we're young, like, right, we're young, so you don't feel it now. You can kind of slack off, do all this garbage and kind of destroy your body and you don't feel it, but trust me, you'll start to feel it when you're older. Like that's something like I had a family member I'm actually like pretty close to, and this is like an older family member, and they always told me, like, health is the most important thing. And when I was a kid, I never understood that. I'm like, all right, like, you keep repeating this. I get it. Health is the most important. Health is the most important. I get it. But once you get older, you understand without health, you have no will. You don't want to work. You don't want to do anything. But when you have health, you're active. You have energy. You want to do things. You want to go places. And so it's the lesson. Take care of your body. And this is me saying this. I'm not somebody who's like eats like super like. I just stay active. I try to stay active. I try to continue, you know, be disciplined. I try to go to the gym every single day, minus Saturdays and Sundays I don't go. But every day I go to the gym. Every day I go to the sauna. Play basketball every single week. So it doesn't have to be basketball. You can longboard. I used to longboard. I gotta buy a longboard again. It's fun. It's like. You buy a longboard, learn how to longboard, go like somewhere downtown or something, just explore the city. Like, I'm the type of person, I'll find something to do. We'll go explore, we'll go like to a new place. People say that there's nothing to do, or just like either you're boring and don't know what to do, because you could always find something to do. Yeah, and you keep away like depression. Like when you work out, even something like working out, like it makes you feel good. And also, you work out, you feel better about yourself, you have more confidence, you're more bold, you're more, I mean, it's like, it's something that I think it's something that a lot of men struggle with, especially these days, is like confidence. What? Oh. What's the move? I mean, I'm trying to wait, man. I like I said, I wanted the pullback. I had drawn this line right here. I wanted to pull back into this like 764 level. I really wanted that. Waiting for that. Thought the pullback was coming, but it never came. I mean, there was one opportunity I could have took on my Tradeify accounts. This break and retest right here. That was kind of one opportunity that I had that I did not take. I was busy reading the chat and talking, and I didn't even realize that this was But yeah, this was a decent, you know, move right there. That break and retest. But I wanted, for my funded accounts, I wanted something like better setup up here. Because obviously when you're trying to catch break and retest, like look, these like mini micro break and retest, they do work. That I may take it on like my evaluation account. But like to copy trade 7 accounts when we're like we pushed up this high up and you're just waiting for a pullback that can come at any moment. I don't know if I'm willing to take that risk. But these kind of risks, absolutely. I'm thinking of actually maybe having, like, once I pass this Tradeify account, I may actually have this Tradeify account for stuff like this, right? So I'll have my 7 accounts for a better, like, more high probability where price really pulls back and gives you, like, a way better opportunity, higher probability. And then maybe have my Tradeify accounts for these types of setups where, you know, price is pushed up. It's still a good opportunity, but I'm just don't want to take it on my funded accounts. You know, and these kind of setups, like you had this, like right here, break and retest, boom. You had another, right? You saw price struggling right there, formed some structure, failed to break lower, broke with volume. Look at this one candle, broke above that high, came back, tested that high, and then went back higher. There's another break and retest right there, but so there are opportunities. I gotta learn how to pay attention when I'm talking, when I'm like, because I'm like looking at the chat and I didn't even realize these setups pop up. But yeah, that's probably what I'll do from now on out. I'll still take these trades, but just on my Tradeify accounts. Because I'm only, like I said, I'm only looking for longs above view up. I don't want to look for shorts. I don't want to be caught in freaking... What up, what up? They don't want it to go green. I mean, they're holding it up pretty well. Have you been? Pretty good. Not bad. So far, a good 2026 year so far in trading. I've taken 1 loss so far. So, it's been pretty good. And here's the other. Here's the thing. Should I take this break and retest? Like, I feel like if I take this on my Tradeify accounts, this is gonna be like the first loss that. This is gonna be like, it's just. I'm more skeptical of it here. Let me try to do this. I may have some fun with my Tradeify accounts just to. All right. See. All right, if it breaks this with volume, I will take it on my evaluation accounts. Not my funded. This is going to be my evaluation, so it's not really, doesn't like count as actual. Still trying to pass these accounts. I'm $2,000 away from passing this evaluation. So I would probably want to risk maybe... See if I risk 80. Trying to do the math real quick. Yeah, probably like 5. Probably would go in with like 5 contracts. Risk $400. But this has got to break with volume. This can't be this sweep that it's doing right now. It's got to break with some momentum to confirm that buyers are still stepping in aggressively. What time is it? Also, it's 10:30. We're at a point where we could reverse right now. So this would be like a very risky trade. All right, this is a very risky trade. So this is evaluation accounts. We're at a time frame where we could sell off right now. So I don't care about the loss if I do take a loss on these evaluations. Just FYI, because people are like, oh, he just took his... I already know the comments coming. Hold on, buy. Yeah. So I'll have a stop down there. Just kind of hoping this thing can hold this level and continue ripping up. I mean, the way it's been moving, but like I said, 10:30, we do get sell-offs at 10:30, so that could happen. That is a likely thing to happen, especially the way we've been moving. But like I said, I'm willing to take this loss. I don't really willing to give this a shot just in case it continues ripping to the upside. See those buyers trying to step back in. Yeah, it's looking like it wants to go lower, possibly. It's got to hold this high pretty much. We got this right here. Actually, I should have took that. Freaking A. That's a way better break and retest. I should have got my entry at. I should have had my entry at 912s right there. 913s. Sellers are starting to come in. Yeah, sellers are looking like they want to push this thing lower, so it looks like I may get stopped out on it. See if they have still the momentum to go higher. Maybe today's one of those days where we just grind higher slowly as possible. We do have those days. Kind of looks like it. I mean, it's still making higher highs. It's not making any lower lows or anything. We're still kind of grinding slightly higher. Looking like it wants to hold this level. But need buyers to step in here aggressively. You know, the buyer's trying to come back in. Man, I don't know why I should have entered right there. This break and retest. I entered off the break of the high when I should have entered off the break of this one. What time zone? Eastern Standard Time. Do you think it's like this since there's red folder tomorrow? I don't think red folder is really affecting today's price action. It'll affect it tomorrow. Be careful for some chop in the morning tomorrow if we have red folder. Like right before news, we could get some chop. But today, I don't think it's going to affect it today, really. Solve this freaking puzzle. TikTok gives me these verification puzzles at the worst times. It's like I was sitting here the whole time, and as soon as I enter a trade, they want to start giving me some kind of puzzle to solve. They need to fix their algorithm. How do you not... They keep detecting inactivity. How is this inactivity? I'm talking, I'm moving. Like, what am I doing? Oh, crap. This thing doesn't... Oh, man. Selling off. NASDAQ selling off. I may get stopped out. Huh. And TikTok keeps getting errors. Now they're going to... Oh my gosh. Don't tell me they're going to kick me out of this live because I can't. Oh my gosh. Yeah, Forex Factory, if someone asked about news. Yeah, I look at Forex Factory for news. And TikTok can't let me. Oh my gosh, TikTok. Yeah. Looks like this 10:30 sell-off is gonna happen. I told you about the 10:30 sell-off. Hopefully this doesn't happen today because I'm in the trade. Come on, you could do it, NASDAQ. No? 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 Yeah, it's going lower. Dang it. Oh well. Probably gonna get stopped out here on these accounts. It's alright. It's alright, I'll wait for something else if... And my chart's little laggy. I don't know why my chart's lagging. Freaking, I'm telling you, it's like one thing or another thing. Alright, I'm getting stopped out. Here it is. I'm about to get stopped out. Alright, there's the stop out. My chart's lagging. Freaking A. I don't know why it's lagging. Alright, I'll wait for something else. Yeah, I said we could get that sell-off. 10:30 is what I told you about 10:30. We get sell-offs at 10:30. I don't know. I should have stayed out of that trade, knowing that. But it was a valuation, so I don't really care. Someone put you in a trader losing comp on YouTube. What? Wait, what? What are you talking about? What losing comp? I'm like, I'm the one of only traders that actually is transparent. I saw a trader the other day. I saw a trader the other day trading live, and he switched his account when he was in the red, and he switched his account to the other account that was in the green. So these traders that pretend like they're, you know, they'll pretend to sell you a course. I'm one of the only ones who actually, you know, is transparent with my losses. Like this is an evaluation. I said this. I literally took one loss in 2026 so far. So it's like... people act like trading, you're not going to take losses in trading. It's fine. I accept the haters. People can hate all they want. That's how you know you're making it when you got haters. When you got no haters, then you got to be worried. Haters, yeah, haters woke up bright and early. And guess what? I'm trading in my own office. I have an office. These other traders are freaking trading in, you know, in their freaking bedroom with drapes from the 1900s and pretending like they're making $5,000 a day. Like, really? So you're telling me you're making $5,000 a day and you're sitting in this shitty ass bedroom? Come on, man. Be serious. Like, for one, like, I respect, even if there's a trader who's still learning, and like, if there's a trader who's losing but the trader is transparent, I respect that so much more than another trader who's pretending something he's not. And I say I'm not the, I don't even consider myself like a good trader. I don't. I got a lot to learn still. Typically, people that make videos are the people that they themselves have no skill, so they have to make videos on other people. Like, these kind of reactionary videos where people just, like, shit on other people. It's like, you have no skill, so your only skill is to shit on other people so that you can get views. Like, the best quote that I've heard is, somebody doing better than you will never hate on you, right? A professional basketball player will not hate on you for playing basketball. A professional musician will not hate on you for you know, learning how to play guitar. But guess what? The people who don't know how to do it are going to be the ones hating on you. And it's like a thing that happens, I guess, internally, where these people, I don't know, maybe they're pissed off that they can't trade. Maybe they really can't trade, and they're just like, they gotta make videos to bring the attention to other people. It's kind of like when somebody flips out on you in traffic, they're probably having a bad day, right? Nobody wins the lottery and then goes in traffic and you know, goes haywire and starts cussing people out and stuff like that. So those people that have road rage, probably going through something. These people that make, like, videos on other people, like shitting on them or talking crap about them, probably are going through something. Because no normal person, no successful person that's actually making money, like, I have a car business, no successful person, I'm not going to waste my time shitting on somebody else trying to do something. But guess what? When you're in your bedroom 24/7 and you don't have any other business and you have nothing else to do, yeah, you're going to sit there and freaking with your little headset on and be a little computer warrior. I actually provide value to society with what I do. Yes, I'm still learning. I'm still learning how to trade. It's other traders are still learning how to trade. And the person that tells you he's all this and that, probably not. There's very few people that I would even, when I look at influencer traders, there's very few people that I would consider a professional, like, good trader. 99% of trading influencers are not good traders. They're good influencers, right? Even the people who have a lot of following, right? They're good influencers, but that's about it. What do you think about TJR? I think he's, obviously, I can't say because I don't know the background. I don't know the brokerage you use. There's a lot of sketchy things people do. I don't know him personally, so I don't really know what brokerage he uses. Like, is he using a regulated broker or is he using some offshore broker? If you have an influencer using an offshore broker, that's a big red flag. It's a huge red flag. If you have a broker, if you have a trader that's, like, posting actual brokerage statements from a regulated United States broker, him making money or she making money every single month and week, like Rips, I give a lot of respect to Rips. Rips is a good trader. If you guys don't know who Rips, you guys can look him up. He's one of the only influencers that I would say that I consider a good trader. I don't really consider anybody else a good trader. Not because they may not be, but because they haven't shown the proof to be a good trader. Maybe TGR has, I don't know, I haven't seen the video, so. But, like, Rips actually shows U.S. regulated broker statements, and people still shit on him. That goes to show you that people will hate on you for anything. He went as far as to show it on Bookmap. His orders. He showed his orders, and then he showed his orders popping up on a live Bookmap of him scaling out of a position, and people still find a way to say, "Oh, he's a scammer. He's this. He's not actually like." People, no matter how successful you are in trading, people will always find a reason to shit on you. That's why a lot of successful traders, like, they don't want to trade live. They would rather sit and come to their office, trade, instead of trading live and just getting shit on every single day. I mean, I don't mind it personally. When I have haters, I really don't mind it. I have thicker skin considering, listen, I'm Ukrainian, and my dad has been my dad's a pretty tough guy considering he was in the military during the Soviet Union, so they were super tough. So I got pretty thick skin in terms of haters can say whatever they want. I'm not gonna I'm not gonna get pissed off. You're not gonna ruin my day. No matter what you say, you're not gonna ruin my day. There's nothing you could say to me that can piss me off and I can't take it. And talking about the subject of being profitable, right? I consider my definition of being profitable, 99% of trading influencers are not profitable. Because my definition of being profitable is you trading a live account and proving in a live account that you can make money time and time again in a live account, where you're posting broker statements month after month, proving that you can make money in a live account. If you can't, and I made a video about this, if you can't prove that you can make money in a live account consistently, you're not profitable. My opinion. Just because I don't care how much money you've taken out in prop firm payouts, does not mean you're profitable. You can have somebody with $500,000 account, $500,000, and he just rents a bunch of prop firm accounts, gets lucky time after time, takes a $50,000 payout. He's still not considered profitable because the strategy that person was using to pass these prop firm accounts and take payouts on prop firm accounts, you can't use that same strategy on a live account. You're going to absolutely get annihilated in a live market. With prop firm accounts, it works because just you could spend $100 and take a $5,000 payout, But with a live account, you blow a $2,000 account, guess what? You can't reset that account. You have to fund it another thousands of dollars to fund it again. So that's just my definition of being profitable. That's why I don't even consider myself technically profitable, because I don't trade a live market. I don't trade a live account. I trade prop firm accounts, which, you could have the skill, but it's do I think I'm eventually going to move to a live account, but as of now, I'm not trading a live account, so. Quit yapping, bro. You just took an L on an eval. Okay, bro. Okay. It's the same person. Apparently, you're not allowed to take losses, even on evals. Sorry, guys. You're not allowed to take losses on evals. You're considered a shitty trader if you take a loss on an eval. Sorry. Apparently, there's no such thing as a freaking good trader, because even hedge fund traders that make tens of millions of dollars a year take freaking hundreds of thousands of dollar losses in a day. Can you imagine if some hedge fund trader went live? I guarantee you, if a hedge fund trader went live that makes tens of millions of dollars a year, he would still get hate. Even though, oh my gosh, can you guys believe he took a $100,000 loss? Can you believe that? Making that kind of statement shows that you don't understand the concept of statistics. And that's the same type of comments. Those people making that kind of comment are the same people who keep blowing accounts left and right. Because they have this mindset of, you have to take winning trades. If I can't win on a trade, I'm doing something wrong. when trading is statistics. I don't care if you have a 90% win rate. You're gonna take losses with a 90% win rate even. And most people do not have a 90% win rate. So you're going to go through times where you take a loss after a loss after a loss. And this proves it, right? I haven't taken a loss. I haven't taken a loss all year. Friday was the first day that I took on my funded accounts. Now, have I taken a loss on evaluation accounts? Yes, because like I said, I'm taking low probability trades on my evaluation accounts. I know it. It's evaluation. That's why I take the trade. I don't really care too much. That's why I don't take the trade. That's why this trade I did not take on a funded account, because it's a low probability trade. I said we could get a sell-off. It's 10:30. I literally said that before I took the trade. So it's like, yes, I take a loss in evaluation, but question is, do I take how many losses do I take on a funded? Trading is not just statistics, it's psychology. I mean, it is statistics. It's all trading is all statistics. Every single model has a statistical probability. There is no such thing as a model that has a 100% win rate, right? You can have a model, and psychology plays a huge role in that too. But that you don't have one without the other. And in order to have the right psychology, you need to understand that trading is statistics. Because if you don't understand that trading is statistics, when you take a loss, you think you did something wrong. But you may have not necessarily did anything wrong. You could take a loss and everything was perfect. I mean, TGR just had a video. If you saw his video where he took the first loss, right? He literally said, like, it was a perfect setup for him. Everything was wrong. Everything was perfect for him. But he still took a loss. That's called statistics. It's not considered him necessarily being a shitty trader. It's called statistics. And that's why I can take losses and it doesn't bother me, because I know it's statistics. You have to size accordingly. That's why if you look on the internet, they say risk 1 to 2% of your account. Why do they say to risk 1 to 2% of your account? Because you're going to go through drawdown. Every trader goes through drawdown. Just like you go through winning streaks, you go through losing streaks, where you're going to have a time where you're going to take a loss after a loss after a loss after a loss. That's what separates the good traders from the bad traders. The good traders can take loss after loss after loss and still stay emotionally leveled, right? And maybe even size down and protect themselves. And then the other person takes a loss after a loss after a loss and thinks something is wrong, starts sizing back up, starts getting emotional, and he just blew his account while the professional trader took a step back. That's why hedge funds have risk managers, right? They have risk managers, so if you're going on tilt, if you're not following your strategy, if you're doing something wrong, they'll cut you off so you don't go on tilt. They absolutely go hand in hand. Psychology and understanding your model, which is statistics, go hand in hand. Props are the biggest scams. Oh, gosh. Oh, gosh. Do I have to have this conversation again? I just explained it like 30 minutes ago why they're not. You know what's funny? I can almost like, based on the negativity of the chat, you can almost gauge like how many people had a bad day. I can almost put money on it that the people like that make negative comments in other traders' live streams probably had a bad day in trading. Like, meaning they probably took a loss. Because think about it, nobody has a really good day in trading and then goes to someone else's chat and then starts like, you know, maybe shitting on them. I'm not saying any of you are shitting on me. I'm just saying, like, nobody does that. That's why I find it funny when people post negative comments. I just find it funny because I can almost guarantee that they took a loss. And there's nothing wrong with taking a loss. But if you're getting that pissed off over a loss, bro, you're doing something wrong. You're probably too heavily sized in. Listen, I'm here. This space should be to help each other out. Like, I'm not claiming to be any like amazing trader out there, right? I'm not claiming to be the #1 trader on YouTube like some other people do. I'm not trading to be the #1 trader on TikTok. I'm not freaking A. I'm starting to get tongue-tied. I'm not claiming to be any of that. So I'm here to learn from even other people. If some people have advice for me, bro, I'm here to learn. I mean, that's why I can run a business. That's why I can run a car business. I'm willing to learn. I'm not here if someone gives me advice to go, you don't know what you're talking about. Now, if you give me advice that doesn't make sense, I'll say that it doesn't make sense. But we're here to learn. If I can teach you anything, if you can learn at least that you need patience in trading, if I can teach you the bare minimum where you could see that trading requires patience, because other traders' live streams, you can't see that. They're in a trade left and right? I'm not in a trade left and right. I'm being patient. I said what I was waiting for. I was waiting for my funded accounts. I was waiting for a deeper pullback down here. I never got it, so I didn't take a trade on my funded. Yes, I did take a very low probability trade on my evaluation accounts. But if you can learn anything from my live stream that trading requires patience, it's already a dub. Sorry, if I'm missing questions, I'm not ignoring you. I'm just, I just didn't see it. All right. Let me try to go back for a little bit. All right. Does anyone know his candle time frame? This is I'm on a 1 minute chart right now. This is currently 1 minute price action. Which prop firm gives you more than 5% return? I mean, a lot of prop firms give you more than 5% return, considering if you spend $100 on a evaluation account, let's just say you all in, let's just say you're around $100, evaluation and then funded. Like, take PropFirmTrader, doesn't have activation fees, so let's just say you spend $100, you pass the evaluation, you get put in a funded account, and let's say you know how to trade and you run that funded account and you take let's just say you take a $2,000 payout, which is not the hardest thing to do. You take a $2,000 payout off a $100 investment. What is the ROI on that? Right? That's thousands of percent return on a $100 investment, turning it into $2,000. So that's way more than a 5% return. That's why prop firms are so cool, because you can risk essentially $100, and if you know how to trade and you have the skill, the return is absolutely insane. Can you please answer my question? How is a prop firm strategy and live account strategy different? Because most influencers you see trading, the way they trade a prop firm account, and this is why I don't consider you profitable until you're trading a live account, until you can prove yourself in a live account, because with prop firms, because you can risk $100 and, right, you can, let's say you risk $100, you blow the account. You risk $100, you blow the account. You risk 100, blow an account. Let's just say $500 later, right, you finally pass the evaluation account, you get put in a funded, and then you get a $2,000 payout, right? You still made an insane amount of money. Even though you blew 5 accounts and you spent $500, when you finally got a $2,000 payout, right? How much money did you make? You still made $1,500 even though you blew 5 accounts. And now you can multiply that across people that spend $6,000 a month on evaluations, on resetting them because they keep blowing them, right? And you do that across 20, 30 accounts, you can take a $50,000, $100,000 payout even though you spent, $10,000 on evaluation accounts. Now, take that same strategy. That can be, you could do that with a prop firm account and make money that way. People do that. Prop firms may not necessarily like that, but they do that. Now, take that same strategy and go to a live account. If you have a $5,000 live account and you blow that account, you have to fund the account again. So you spent $5,000. Now you have to fund the account again. Now you have to make back that $5,000 and then make money on top of that. So you see how much more risk, how much more discipline you need in a live account, because you cannot do that strategy in a live account. Once you blow an account, you have to fund it again thousands of dollars. You can't just pay $100 and get a $50,000 account. So that's why I say, like, with a live account, it requires a lot of discipline, a lot of, like, even take, for example, the like drawdown. A lot of people, when they go and drawdown on an evaluation account, they just blow it. They don't care. They blow it, they'll reset it, they're back at 50K. On a live account, you need to learn how to go through drawdown. Like, going through drawdown, starting to size down, right? You're starting to size down. You're kind of taking a step back. You're evaluating your trading. You're journaling. Then you're taking a little bit of some base hits, size down. Then you're getting your confidence back, your rhythm back. You're starting to size back up again. Like, it's a very delicate balance where on prop firms, people go through drawdown and they start sizing up to make back that money. You can't do that on a live account. You're going to get destroyed. That's why I say most of these traders that trade, influencers that trade the way prop firms do it on prop firm accounts, they would get annihilated in a live market. Live market is a professional market, right? This is how I look at it. Prop firm accounts are the equivalent of me either playing a basketball video game or me going to the courts and playing a quick game, 2-on-2. Just a quick fun game. Professional, the actual live market, you're in an environment with professionals. You're in an environment with hedge funds. You're in that environment. That's a professional environment. That's like the NBA. You've made it to the NBA when you trade a live account and can make money on a live account. It's two different worlds. And also on a prop firm account, they're simulated orders. They're not actually hitting the live market book. So they're completely different. You could still make money on prop firms. But that's why I consider my definition of being profitable, you have to trade on a live account to consider yourself a profitable trader. That's why I don't even consider myself a profitable trader. I don't trade a live by my definition. I can't consider myself that. And maybe I have a more strict definition of most people, but that's just my definition. And eventually I'm building myself up to eventually, move to a live market. That's my goal. My next payout, I'll probably open up a live account. All right. Sorry if I missed your, or retype your if I missed your The strategy doesn't, the psychology changes. Yeah, and psychology, trading a live account, psychology also plays a big role in that. Yeah. Live account means it's your own money. You're funding your own money. There are no rules in terms, there are margin requirements, but in terms of there's no consistency rule. There's none of these rules that prop firms give to you. But you can take over markets with a live account. If you have a crazy account size. Been waiting on this reversal all day. Yeah, there are some, there's a couple good setups here. Like, when I say good setups, it's like, not setups I would take on a funded account. Because I look for good setups on funded, but these types of trades I would take on a valuation. Like, lower probability. I don't think it's like, the thing about it is you can't compete with banks. That's the thing. I don't care how good your strategy is. You're not going to compete with banks because, like, this price action you see right now on the screen, 80% of the price action you see right now are algorithms. They're trading bots. They're algorithms by hedge funds. So they have $100,000 setups and they have this low latency freaking hyper scalping where they can execute a trade in a millisecond. Like, you can't compete with that. There's no way you can compete with that. So they're not really, like, hedge funds, even if you have a live account, hedge funds are not going to be scared of you in terms of like, unless you start trading crazy capital, then you start competing with them, then, you know, there gets a little bit of like, that's a whole different challenges in that ball. It's a whole different ball game of challenges when you trade a lot of capital. Do you think day trading or swing trading is better? I don't think necessarily one or the other is better. I think it's about your psychology. Some people psychologically do better swing trading, and some people do better day trading. So you would have to just figure out what works best for you. Like what kind of trader would you want to be? All right. So sorry. So if I make consistent payouts with the same 5 accounts on prop firms, I'm not profitable? By my definition, not yet. I mean, yeah, my definition, I mean, I agree. I may have a strict definition, but that's just like, if you can do that consistently on, you know, on 5 accounts, and you can consistently take payouts, and you're taking payouts, and you open up a live account, and you can do that same thing on a live account, then yes, I would consider you profitable. Because another big reason, like even if you took payouts consistently on a prop firm account, just the whole concept of drawdown and you having to like I don't know how much you're risking per trade. I don't know all that. Like, obviously you know what you're doing, right? You know what you're doing if you're taking payout after payout consistently and not blowing your accounts. You're doing good. That's you're doing what you're supposed to be doing, so that you're gonna be that person that, if you want to go to a live account, you can transition to a live account very smoothly. And then if you start, you know, eventually I think you would want to, I mean, me personally, I want to build up my own account, a live account, because if I can take an account and start it with $5,000 and then, you know, trade in a couple years or whatever, I can have my account at, you know, $200,000-$300,000, then, you know, you're building something of your own. Just like I have my own business I'm trying to build up. I try to build my own thing, especially if you can trade. Like, why can't you have, if you really can trade, why can't you have a live account and then still trade prop firm accounts? So you're building up your own personal capital while you're still taking payouts on prop firm accounts. Why can't you do that? But yeah. Banks move price, so you will be emotional. I mean, banks do move price. That's just supply and demand. When you take a massive position, you're going to move price. It's how it works. If I have a classic car and there are only 20 models in the whole world and I own all 20 models, guess what? I have control over price. So when you're trading big volume on the markets, you kind of have control over price, but not necessarily also, because that can go against them. If anyone knows a little bit about the live markets, there's something called a black book in the markets, where a black book is where hedge funds can route their orders like that won't be shown on a level 2 chart. Because the problem is, when you're trading massive size on a level 2, is other banks see other banks. So let's just say a bank wants to get into a position, $100 million position, right? When you flash $100 million order on the charts, right? That can affect price. People can front run you. There's a lot of things that can happen. So some banks want to hide their orders. They don't want people to see that they're about to take a $100 million position. So what some banks do, they route their orders to what's called a black book. So a black book is where they take your order, they pair it to somebody else that you're trying to sell, they're trying to buy, so you get paired with a buyer, the order gets executed the order gets executed, and by the time you see it on the level 2 time and sales, by the time you see it on the time and sales, it's already been filled and executed. So, like, there is none of that, like, you know, and that's what I'm talking about, higher level trading. They have to deal with that. Where You get into a big size, other people see your big size, and there are ways they hide that size so you don't see it. Because you don't want price to start freaking out. If somebody places $100 million, you don't want price to start going crazy. All the algorithms start going crazy because they see that price. But understand this, banks are fighting, they're trading against other banks. Like, you got two sharks, picture this, you got two sharks in the water, right? And these sharks are hunting for food. We, as retail traders, we're the tiny fish on the backs of the sharks. The sharks don't even realize the fish. The sharks are just swimming around, and the little tiny fish are following the sharks. That is the same thing in the market. The banks don't give a crap about retail orders. They don't even pay attention to retail orders. Like, our retail, even if you're on a live market, when your orders are so tiny, it's just like they're breadcrumbs. They're not trying to go for your orders at all. That's the whole ICT misconception thing where banks are hunting your stop losses. Banks don't give a crap about your stop losses. They don't care about your 5 micro position or your 1 mini position. When they're trying to get filled on 100 contracts, they don't care about your 1-2 contracts. They're fighting against each other banks. And understand this, most traders that trade retail right now are trading prop firms. So a lot of people aren't even trading a live account. So even then. Banks can't hide it. I can see them on the chart. No, banks absolutely can hide it. Look up what a black book is, and then banks that absolutely hide their orders from you. You're not going to see that order until it gets executed already. And by the time you see that order, it's already been filled and it's already been executed. Look, black book in trading. All right, let's find the definition. Hold on, where is it? Is it, or no, not black book. Sorry. Black box. Is it black? It's black something. Black box? Forgot what the term was. There is a term though. Hold on. Oh, it's, crap. It's, black pools, that's what it is. Black pools. I knew it was black something. So, orders executed off exchange. Away from public stock exchanges typically happen in dark pools, which are private trading venues for institutional investors to trade large blocks of shares anonymously, preventing significant price impact. So, when you have dark pools or black pools, private trading platforms, alternative trading systems, where large trades, block trades, are executed without pre-trade transparencies, meaning order books aren't public. So you have orders executed where they're not public. By the time you see that order, it's already been executed. And they do that to prevent price from freaking out from their order. Right? Where preventing significant price impact, which makes sense, right? I mean, listen, I would do that same thing if I was placing 100 million. I wouldn't want other people seeing my order. Yeah, dark pools. My bad. I said, what did I say? Black box? I said, yeah, I got the name wrong. I knew it was black something. Yeah. It's actually really interesting how, like, all this works, and Bro, there are stuff that you can learn about. Like, I once went into a rabbit hole of trying to learn about, like, there are stuff like hedge funds do where it's like stuff that is borderline illegal, but they kind of get away with it because there's a way around it, right? There's like, if there's a, they're saying if there's a will, there's a way. Like, you know how spoofing is illegal in the market, where you're not allowed to spoof, where you're not allowed to place an order and then spoof the market and then cancel that order as price comes up to fill your order. You're not allowed to do that. That's illegal. But what institutions will do is they'll place a bunch of orders, like different levels. Instead of putting one massive order, they put a level of a bunch of orders. And so they'll allow price to hit some of those orders and then cancel all the rest of the orders. So it's technically not, it is spoofing, but it's technically not spoofing. And there's like, it's kind of like a way to work around it. And they do all these like tactics where it's like, is it technically legal? No, but do they get away with it? Yes. Yeah, this is shares are stock market, futures are contracts. If you blow a PA account, do you get a renewal? You have to, if you blow a PA account, you have to, there's no renewal. I think some prop firms, when you do the instant funding, I think you can, but I don't think it's worth it. But typically on a prop firm, if you blow a PA account, you have to pass an evaluation again. So you have to buy the evaluation, you have to pass it again, and then get put back into a funded account. Oh, do they? I don't know. Do they not exist in... You may be right. I don't know if they exist in futures markets. I'll look it up. Does dark pool trading exist in the futures markets? It does. Yes, dark pool trading exists for some futures contracts. All right, so some of them, not all of them. Some futures contracts allowing institutions to trade large blocks anonymously. Do they happen in NASDAQ? Can you... Let's see if dark pool exists in the NASDAQ. Exist in the NASDAQ futures market. Dark pool trading as it exists for equities does not operate in the same way for the primary regulated NASDAQ futures market. The main futures exchanges such as CME Group prioritizes transparent price discovery. However, there are mechanisms that offer similar benefits. So there are like transparent markets, block trades, iceberg orders. Iceberg orders exchange also offer iceberg orders, a reserve order. With an iceberg order, only a small visible portion of a large order is displayed. So there may not necessarily be in every futures like market, because I guess the way what they're saying is the CME is big on prioritizes transparency, but there are iceberg orders where your full size order isn't shown on the screen. So it shows that you do have an order there, but you don't know the full size of that order, which is kind of a similar thing. I mean, it's a similar thing. But like, I think dark pools are more for like institutions want to get into a trade also without other banks knowing that they're getting into that same position, right? They're trying to hide their positions from other banks. So that's the other, I guess, advantage with the iceberg order. There's still other banks can see that that bank is getting into a position. They may not know the full size of that position, but they know they're getting in. Price action will tell you. I mean, yeah, you can see it for price action. I mean, they take out lows and like, look at this right here. They took out this low and then ripped higher. See, this is a way. When you have a pullback like this, a break and retest is so much better. Like you have this level here where it breaks out of that level where you see right there. Starts breaking out of that level, comes back and retests it and starts going higher. Yeah, I shouldn't have I shouldn't have taken this high break and retest. Ended up being a liquidity. That was just stupid. I should have waited more for a pullback. And then down here took a break and retest to go higher. Then it would have been in a good spot. But yeah, you could see price action and you can kind of see what they do. I mean, you can see what price likes to do. We came down, right? We took out this low down here, right? We took out that low and then we start moving up. And it gives you, that's why I kind of look for that too, because when we take out a low, then you get a break and retest after taking out a low becomes a higher probability trade because it has already taken out that low. Now you're like, all right, it's breaking. Now it's breaking out with volume, retesting it to go higher. So you're thinking it probably doesn't want to come back down to that low. It's going for another high possibly. At least that high up here. NQ is scam free. It's the best asset. I don't see how NQ is a scam. Is it hard to trade? I mean, it's difficult, but it's not a scam. Dark pools are for stocks, nothing else. I mean, they say dark pools do exist in futures, but not all, not every. But there are like other ways, you know. There are other ways you could do it in futures that are similar, not the same. Every day, the bank's goal is to hunt human tilt. That's not true. Like I said before, the banks don't give a crap about humans. Like, think about it. Look at the statistics. This is why I say statistics. 80% of the market is algorithmic. It is hedge funds fighting against other hedge funds. We're saying 20% retail. Think about all the people trading prop firms now with prop firms blowing up. So even 20%, let's say 20% is retail. Do you think the 80% give a crap about the 20%? The 20%, and not only the 20%, they're all trading different strategies. None of them like, you know, so it's like, so what are they really going for a very small chunk when they can go after other hedge funds that trade bigger size? And the hedge funds are fighting against each other, are competing against each other, and you happen to be in the way. If they take you out of your stop loss, like what happened on Friday, where I got stopped out and price ran immediately to my TP, were they hunting like my order? No. What ended up happening was my order happened to be in the way of maybe another massive order that they were going at. I don't know. But they for sure are not hunting retail orders. They don't care about retail orders. You're not big enough to make a difference in the market. Like I said before, is the perfect example. You're the tiny fish on the shark's back. The shark doesn't give a crap about you. It's hunting something bigger. You just happen to be in the way. If it's trying to eat a bigger fish and you happen to be in the way, guess what? You're taken out too. You're getting eaten too. It's the same exact thing. They don't care about the 20%. They want to master human psychology, which includes the 20. I don't think... I don't know. I have a just different opinion. I don't think they're trying to master human psychology because this is all coded out. When you say they, you're talking about an algorithm. You're talking about a computer, right? And the computer is going to do what it's programmed to do. And these hedge funds, they're constantly reshaping their algorithm. The algorithm doesn't always stay. No sound? Are you serious? There is sound. All right. You're muted. What I was saying, the hedge funds, they're constantly redoing their algorithm based on market sentiment. Like, they're changing it. It's not never the same algorithm forever, right? They're constantly redefining it, rechanging it, adapting to the markets based on news that comes out and this and that. So, where was I getting at with this? But human psychology, yeah, they don't, like, the 80% are computers trading right now. Those computers don't give a crap about your psychology. They're trading based on the way they're coded to trade, right? And if you happen to have your stop loss at a low where lows get taken out, highs get taken out, they're not going for your stop loss. You just happen to be in the way. And that's why you have to realize what happens in the market and not get your stop taken out because you took a... But I really don't think that they really even pay attention to trade. I really don't think they even pay attention to retail. I think we're such a small chunk that they don't care about our psychology. They care about other hedge funds, which is why, like we were talking about earlier, dark pools exist. Why do dark pools exist? To hide their orders from other banks. Like, you have one bank does not want another bank to know that they're getting into a position. That bank does not care that you know. They care that the other banks don't know. You don't have to be a part of the algos if you master good psychology. I mean, yeah, I agree. It's psychology and pattern recognition. There's actually, I saw that there was a hedge fund that hired professional, I think it was chess players. Hedge funds recruited professional chess players. Why? Because they can understand what are chess players good at. They're very good at pattern recognition. So if you can recognize patterns, master psychology, yeah, you can, you're catching a little sliver of the market. You're trying to catch a little piece of the market. You're not trying to compete against the algorithms, the bots of freaking Citadel and all these hedge funds. You're just trying to catch a little portion of the market. That's it. You're trying to make your money and walk away. That's it. You're not trying to compete with them. You're the little fish. And hedge funds go on NBC to manipulate the algos. Hedge funds do a lot of crazy stuff. It's a crazy game. When you start, like, even think about dark pools and all this, hedge funds are a crazy game. They're in it to make money. They're in it to make money, and they will do whatever they have to do legally to make money. Now, they could scratch the surface on stuff that is borderline illegal, like I said before, but is borderline, but they're going to figure out a way by any means to make money. If that's a way of manipulating price, if it's a way of finding out what a bank is trying to enter and somehow taking advantage of that, they're going to do whatever they can to make money. Because, right, trading is a business of making money. It's a crazy market. It's not a market that's very nice, right? You're going to get destroyed by the market if you don't have good psychology. If you happen to be in the way, so you have to have stop losses. If your trade doesn't work, you got to realize your trade doesn't work, walk away. Like, this isn't a game of ego. Well, the market there's no room for your ego in the market. Because if you're going to have a type of ego and you're going to try to pretend that you know everything and, you could trade without losses, and if you take a loss, you did something wrong, and I'm going to hold this trade, I'm going to cancel my stop loss, it's going to go back up, you're going to get destroyed in the end. It's a very tough game. You're trading against some of the smartest people, algorithms that, it's a difficult industry. It's a very difficult industry. Hence why there's a 90% failure rate. And that 90% failure rate isn't necessarily because I think most people treat it as a casino. There are very few people that actually want to learn the skill. Everybody wants to get rich quick. So everyone treats it like a casino, like a get rich quick scheme. That's also why I think 90% lose money, because 90% don't know. Like, you got to think about if a doctor didn't have to go through medical school and started doing surgery, what would be the failure rate on surgeries? Like close to 100% failure rate on surgeries. Does that mean surgeries don't work? No, it just means it would be a stupid system. You have to make people learn something before you allow them to do something. But because the market is so easy to get into, any person that doesn't know what they're doing can put, $2,000 into an account and start trading. What is why there's such a high failure rate. There's no barrier to entry in this industry. Catch the asymmetry that banks make and you'll be rewarded. Yeah, it's pattern recognition is why I say this break and retest. It's one of the, in my opinion, it's one of the easiest strategies to learn, because if you can recognize patterns, I mean, look at just today, how many times, count how many times price broke and retest. Just simple break and retest back to the high. Here's the first one, right? Price broke out of the high, right? Displaced above it, came back, retested that high, and then went at least to the body. Now, it didn't take out the high, but it went to those body candle highs right there, right? Here's another one. Price pulled back. Here it made this high right here. It was struggling, broke out of that high, pulled back, retested that high, went back higher. Now, right? Price started pulling back right here. There's no structure. Here's the first structure that gets formed. Here's the second structure that gets formed. Here's another structure that starts getting formed. So you have these highs up here, right? Let me move this. You have these highs that you're paying attention to, right? Now we've come down. We've taken out a low. Price starts moving back up. It starts ever so slightly breaking out of that high, but not really. Now here it starts breaking out with more momentum. These candles start breaking out with more momentum. What happens? We get a pullback. It retests that high, and look at that. It went higher, and now it's still going higher. Even though here's another break and retest that didn't really work out. I mean, when you've pushed up this high, at some point, it's going to fail, right? That's why I say break and retest are better when you have a pullback. Because when you've pushed up this far, it becomes such a low probability that you may have a test. Like, this is a very low probability where it did test it and you see volume came into the market, but it just failed and just went lower. Like, look how many times it worked. I mean, so it's like, it's pattern recognition. When you watch the market every day and you see these patterns happen time and time again, you start to realize them. You start to get better at realizing them. You start to get better at your risk management, and you can start making money. It doesn't take a lot to make, like, you just need a little sliver. You don't need a freaking, 300-point move so you can post it on X and start bragging how you're the best trader in the world. You don't need that big move. All you need is a, 40-point move in the market to make money. 40, 50, 30-point move is not a lot in the market. Think about that. Like, from this low, that's 10, 20, 30. That's back up to this high. This little sliver is all you need to make money in the market. Catching a predictable moment in time where you can predict it with good probability. All right. I think it's time. Ugh. I gotta learn how to, when I'm reading the chat, to pay attention to the charts, because there were other opportunities that happened that I did not take because I was so focused on going on a rant that I missed all these trades. That I started to miss all these trades. Now, grant you, they would have been evaluation order trades. I wouldn't have took it out on a live account. Like for my PropFirm account, for my funded accounts, I wanted the pullback back down here. Back way lower. At least to like the 200. If this thing would have, but. So like the very low probability trades, I'll still take them on my Tradeify account. And then the higher probability ones, I'll take on my funded. But see, the people that don't know probabilities, I'll take a low probability trade and say this is a low probability trade, and then I take a loss and people are like, oh, you don't know what you're doing. Oh, you take losses. Like, you can't win, man. I use Ninja Trader. Yeah, this is the 1 minute chart, but like I pay attention to higher time frames. You have to pay attention to higher time frames, right? Look what happened today on the hourly chart, right? Price opened up 9:30. Where is it? All right, somewhere around here. Price opened up, right? You see it holding that 200, right? Price manipulated right there, popped right back up. Here's some structure, broke out of the structure, and was holding that 200. When we're above this 200, we're pretty bullish, right? When we start breaking below that 200, it starts being a red flag. And I pay attention to higher time frames, where we are on the 200. Are we above it? How far are we above it? It's coming up to all-time highs actually right now. It's about to take out all-time highs. Not all-time highs, pre-market highs, sorry. Actually just took it out. So price just took out pre-market highs. And then I look at, there's the hourly chart. Go down to a 15-minute chart. Start looking at 15-minute. Pay attention to where imbalances are on the market. We're still above. We're forming structure. I mean, we're very bullish right now. Now that we took out pre-market highs, who knows? Price may just take a dump back down. And you just look at every time frame. And like I said, don't try to fade the market. Go with momentum. Stop trying to fade the market where, you're trying to short highs it's making. Why not wait for a pullback and wait for momentum to come back in and go with the trend? We're very bullish. Nothing about this screams bearish. Nothing about this is screaming bearish. So why would you be trying to short? I guarantee you there are people today trying to short up here. Maybe they cost some shorts, whatever, but why? Why would you put yourself in a position of lower probability when there's a higher probability trade in your face if you just go with, if you take maybe the same strategy, but just go with momentum? That's it. If we're above view up and bulls are dominant, why not go with the bulls? If we're below view up and bears are taking over the market, why not ride the wave with the bulls, but with the bears? That alone, I think it could help you out in your trading a lot. It's only a loss when you close. Oh God, that's a horrible mindset. I hope you're trolling. It's only a loss when you take a. It's only a loss when you when you sell. You technically didn't lose if you don't sell. That's how you blow up. That's how. That's one way to blow up an account. And trust me that you will blow up an account doing that. Those days where freaking it just tanks and just continues going lower and you get liquidated. If it was that easy, then everybody would be making money. Learn that the hard way again, bro. I'm fucking pissed. Yeah, you're gonna. That's the part of trading. As long as you learn from your mistakes, don't be pissed off. Learn from your mistakes, and if you learn from your mistake, that's not an L. That's a win. If you learn from it, if you keep repeating the same mistake, then yeah, stay pissed off. But as long as you learn from it and stop doing that mistake, then it's a learning lesson that could save you a lot of money down the road. So it's really not a loss if you learn. A mistake that's learned from is really not a loss because of the amount of money it could save you down the road. It's not a loss. It's an investment. Look at it that way. It's coming down now, yeah. This thing is just like, there were some trades to take that like I said, I got to learn how to pay attention to the charts and like read comments and still pay attention to price action, because I miss trades because I'm like trying to I'm answering questions and stuff. I got stopped out on that reversal in the bottom of that 1 hour. You tried to fade it? Yeah, don't fade it. Like, look at even my strategy, right? Look. Like I was showing you earlier. Wait, what the heck? Where's... Oh, my chart's like... Hold on. Like I was showing you earlier, right? This, I'm trying to adjust this so it's not weird. I was showing you earlier like these break and retests, right? Let's just say I was showing you how many break and retests work. These like lower probability ones. But let's just say I flip my viewpoint and I'm only looking for shorts. Instead of only looking for longs, now let's just say I flip that same strategy and only look for the opposite. Break and retest. Here's a break and retest. Going short. Look at this. It broke here with displacement to the downside. Boom. Retested it. And then what happened after this retest right here? Look at that. Price struggled at break even. And then look at this. Price went higher and stopped you out. This one would have worked. But other ones, like, it just becomes like, look at this one too. Here's some structure. Look at that. Price breaks below that. Comes back. Retests it and just blows right back above it. Like, that would have been a loss too. All because you're looking at the wrong momentum. You're trying to fade the market instead of going with it. And that was a hard lesson I had to learn for the hardest time. I don't know why for the longest time, I was the same way. I would always try to fade it. Like, man, when price was selling off, I was looking to buy. Like, when price was selling off, I was just looking for to buy. And I'm like, dude, it's selling off. At some point, it's going to reverse. Where do I buy? Where do I buy? And I'm constantly fading and fading and fading and fading. Instead of when price is selling off, I'm looking for an opportunity to sell. And I'm waiting for price to pop back up and give me an opportunity to sell, to get into a short position to go with momentum. I don't know why I had to learn the hard way too. I don't know, for the longest time, I was always trying to fade the market. I don't know why it was so hard a lesson for me to learn, but it was a very hard lesson for me to learn. Stop fading the market. I had to tell myself, I'm like, bro, this isn't a lie. At one point, when I was learning, like, and this was like maybe a year or two ago, I would sit there and I would be like, bro, how am I so good at losing money? How am I so good at losing money? And the answer to that was because I was fading the market. That's how I was so good at losing money, is because I was constantly fading the market, fading what price action was doing. When price action was bullish, I was bearish. When price action was bearish, I was bullish, because I was trying to catch reversals. Some people are good at it, but it's a very difficult thing. It's way harder than going with momentum. But yeah, that's my 2 cents. If you could take anything away from today, like, yeah, don't fade the market. At least have that view up line. Anytime we're above the view up, we're pretty bullish. Anytime we're below the view up, we're pretty bearish. That alone can make a crazy impact on your trading. So, all right, people are starting to call me. I gotta go. I gotta go eat, and then we'll be back tomorrow. I'm hoping I can take a good trade tomorrow on my funded. But we'll probably get some good trades tomorrow. I'll be back tomorrow at 9:30. You want to stop by? I'll be back. So y'all enjoy the rest of your day. Don't take stupid trades. Where's my... Hold on. Confused. Give me a second. Oh my gosh. Oh, it's right there. But yeah, don't take stupid trades. Like, learn how to walk away from the market when you're not seeing it. That's why I have a rule for myself. If I take 2 losses in a row, I lock myself out. That happens. I can take 2 losses in a row. It's called statistics. It happens. I'm not seeing the market. Maybe I'm pissed off that day. Maybe I'm fading the market, breaking my rules. Have rules for yourself to protect yourself, not to hinder yourself. It's a business. You're in this game to make money long term, not to take a few wins here and there and get this dopamine hit. We're learning how to become better traders day after day. It's a continual process. Like, I've been trading full-time for 3 years. The people who have been trading full-time for 10 years, they're the ones making $50,000 days. I can't look at the person trading 10 years and making $50,000 a day and me only trading 3 years and still, like, I'm on a completely different level than them. So it's time. I'm still going to learn. We're going to learn every single day. I'm learning, and we're going to get there. But have a wonderful day and stay safe, and I'll see you guys tomorrow. Peace out.